Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, I want to show you a few techniques that I use to remain calm with all the stuff that's going on in the market, including OPEC and just these general fluctuations and all the stuff. Like how is it that you can stay calm? What are some tools and techniques that you can use? I want to cover this because one, someone asked me on Instagram the other day, and I don't think I've had a dedicated video just to this particular topic. I know I've mentioned them in other places, but I went back and searched my own videos and didn't see it. So here we go. The first thing that I need you to do is to zoom out. Okay, I know right now the market was down today. We had 2 great days earlier this week, but I read today that this 9-month fall, excluding October, so from January to September, this is the fastest drop in the market we've seen since like 2008, 2009. Okay, that sounds really bad. The other thing too is if I actually look at a chart, if I go back, this actually puts the stock market right back to where it was in about January of 2021. That's like, oh, that was last year. That's not great. I'm not happy about that. But there's a difference between, the market dropping as fast as it has since 2009. It gets me, anxious and afraid. And then also look, hey, it just takes you back to January to 2021. It's like, oh, that's a difference. Those two things are true. They are the exact same things. However, when I zoom out and see it, it makes me feel a bit different. So remember to zoom out. It's not always about the day to day, what's going on in the market, worst day since whatever, best day since whatever. And we've even said that even last week when I said the market was up, or when we found out the market was up, I said, look, what am I going to do? The exact same thing I was going to do anyway, right? So you want to make sure that you're zooming out and that you're not honing in on what exactly is going on the day to day. The other thing too, and I know we've talked about this before, is that you have to manage your media diet. And when I say media, I'm talking about the CNBCs of the world, whatever stock alerts that you're getting, because their job, and I know because I write articles too, I don't do newsy articles, but more explainer articles. But the reason is they are trained to get you to click and trained to get you to pay attention. So when they say stock market's up X percent, stock market's up, since best or worst day since X year, that is to get you to pay attention and to react. They don't necessarily want you to go buy and sell per se, but their job is to keep you attentive to whatever it is that they are doing. Now, the reason why they do that is because a lot of times they're paid by ads. They want to be able to say that we have 1 million people getting on our app and understanding what type of financial information, and I can say, hey, I'm advertising my book, I want to make sure I'm on that website. So know how the system works. They are trained to get you to pay attention to whatever it is that they are saying. It doesn't make them bad, but it does make them, reactive, right? It makes them make you reactive, and you don't necessarily want to pay attention to every single headline that you see. You don't want to pay attention to every single negative thing that you see, because remember, your brain is trained to remember negative circumstances, negative effects more than the positive. Right? So right now, again, this has been the worst slide that we've seen since 2008, 2009. But it just puts you back to January 2021. This week, right, or even last month, the market was down 9%. Now, in that, we just had 2 days this week that had been the best we had in 2 years. But what you really remember is the negative part of it. So try and coach yourself to understand, like, hey, I want to zoom out, and I also don't want to hone in on every single negative piece of news that I get. Negative news headlines, and there are plenty of studies that confirm this, show that people react to those more. They pay attention to those more. You might want to get off of the news app. Now, you can stay subscribed to this channel because I talk about education, but you definitely want to kind of tune away and sometimes even delete some of those news apps if you are more reactive to it. The other thing too that you want to pay attention to and that can help you stay calm is don't check your account every day. You actually do not and probably should not check your investing account every day. You definitely don't want to check your 401k every day. The reason why I say that, especially for your 401k, is you can't really do much about it. So if I'm selling a stock, let's say I'm on Public or TD Ameritrade, I can sell a stock and it'll put me right back in cash instantly. But inside my 401k, just due to the mechanics of mutual funds, it's actually not going to trade until the end of the day anyway. So whatever happens, happens. You can wake up at 10 a.m. say, oh my God, stock market's dropping, let me sell everything. And it actually won't sell until the end of the day. So whatever's going to happen is going to happen whether the market improves or does not. Also, and we've seen this before, when you miss just 10 of the best days in any year, you can go from a 9% average gain over the last 20 years to 5%. That little 4%, that can cost you year over year, and you never ever know when those days are going to come. Again, Monday and Tuesday of this week proved that you never know when those things are going to hit. So stay invested, but also you don't have to check your account every single day. Y'all know me, I check my account twice per year. It's the only times that I go in and make those different decisions and say I need to buy or sell, what went well, what did not go well, and how do we need to change up this portfolio. Checking your account every day is a great way to lose money, and it's a great way to stay stressed. So don't do that. Don't do that. You don't want to do it. I say this all the time as well. It's like you're in one lane that's going slow, you switch to the other one, that lane goes faster, and all you're doing is going back and forth, stressing yourself out, making decisions that you don't necessarily want to make. So you want to make sure that you do not do that. So make sure that you're zooming out. Make sure that you monitor your media diet, because the media can get you excited and sometimes anxious and cause you to make some adverse decisions. And then lastly, make sure that you have like those set times and dates that you're going to check your account, that you're going to make those decisions. That's probably one of the biggest things that has helped me to manage what is going on in my portfolio. Y'all see me on public and I add money and invest in more companies each and every week. But again, I've said this before, I do not know, and nor do I go and check, hey, I made exactly this much on O'Reilly, I made exactly this much on this company, my account balance dropped by whatever. I'm not looking at that. I go in, I invest, I get out. My own personal retirement accounts, my 401k, all that kind of stuff, I don't even check them. I do not open those apps. I keep that somewhere else. I invest on public on a regular basis, and the rest of the stuff is automated, like putting my money in my 401k and things like that. And to even prove this to you, you'll actually go, if you want now, I'll see if I can find the tweet and put it here. So this year in June, which is the one time that I check my portfolio, next time I check it will be in December, I went back and noticed that my Roth IRA had actually beaten the stock market as a whole in 2022. And I was shocked. Over the 2-year period and even over a 1-year period, it outperformed the S&P 500. I didn't know that because I don't check it. I leave it alone and I buy and hold. I practice what I preach. And, I say, oh, wow, my account did well. All right, close it. I'll see you in December, and then we'll make some adjustments then. So that was one of the things that helped me. I logged out of my own account, right? And unless it's, auto deposit $200 a month or whatever it's going to be, or I have to go in and dollar cost average on my own manually, that is all I do. Now, for me, I'm a little more, I don't want to say immune. I'm a little more numb because as a former financial advisor, I have to read all these headlines. I have to be able to educate people and explain things to people as well. So for me, I'm kind of numb to it, but you don't have to tune into every single news story every single day because it's going to be too much information. And take the Elon Musk story. Just the other day, we had talked about how, he was in the lawsuit, then he was going to buy it. And then I saw a headline, and I'll put the headline here because I don't have it, that I think Twitter denied that they are not going to take the $44 billion or whatever it is. Every day is something different. I can't invest based on that every single day. I let stuff play out, right? And this is one of those instances. So in the meantime, I'm going to go read up and see exactly what the story is. But in general, that's the thing that I want you to do. Zoom out, understand what the media's job is and kind of resist that. And then don't be in your accounts every single day. You don't have to do it. There are some clients that I've had in the past. Studies have also confirmed this. There's several articles by Jason Zweig, Z-W-E-I-G, where he talks about, hey, once a year, you're fine. Twice a year, you're fine. Quarterly, you're fine. More than that, you're doing too much. So you don't have to be in there and stare at it because it's not going to make anything better. And you're more than likely going to move yourself into bad positions. Just let the market play out. Stay tuned for the long term. Zoom out and relax. All right? All right, so that is it for me. I am going to go on the walk and go pick up the kids, and I will see y'all tomorrow. If you want me to cover this Twitter story after I read more about it, feel free to let me know in the comments below. That's going to help me help you. If you want your portfolio graded, feel free to let me know too. This is y'all channel. I help y'all out. In terms of helping y'all out, also make sure that you check out the members only. I will put that link right here. Every single week, I do a new exclusive deep dive breakdown or a Q&A, or we'll talk about some of the trading techniques and power sites that I use to help me become a better investor, find investing deals, and figure out what to invest in and what to avoid. All right, that is it for me. I'll talk to you later.